Hello, welcome to our very first revision session for the Level 2 Business Environment unit. This is a brand new unit on the Quals 22 syllabus. So it's really exciting to be getting started with this qualification finally. We're going to be having a look tonight at task 1 from this exam. It's a nice sort of easing us into the paper, and we're going to be looking at questions around business types and business functions. So yeah, hope you really enjoy it. My name's Catherine. I'm one of the tutors here at First Intuition. Normally what I would do with a revision session is we'd have a look at the examiner's report first of all and see how this task looks from that. But we don't have one of those yet because all of this is completely brand new. So I thought to start off with, we would have a look instead at this exam more generally, very quickly. I say because it's a new exam, it just gives you an idea of what we're dealing with. So for those of you that were familiar with the 2016 version of the syllabus that was before this one, you did have a synoptic exam to do for that, and this business environment unit is still a synoptic exam of sorts, so it will pull in knowledge from the other units on this qualification, which is why we probably would advise you sit this towards the end of your level 2 journey. However, there's still a lot of new stuff in this and very interesting topics and things that I found really useful in my journey in accountancy. You have got 8 tasks on this exam. We will be looking at task 1 tonight, and that's a nice sort of starter for 10 marks. Quite a chunky exam in terms of time. It's one of the bigger ones. You will have 2 hours for this exam. And there are a couple of tasks in there that require typed or rather written responses. So there is a wait on the return time for the results on these exams, like we had with the synoptic in AQ16. So some similarities with the synoptic that it replaces, but quite a bit of differences as well. So without further ado, we will have a look at this first one, task 1, which, as I said before, was for business types and their functions. There's not really any calculations involved with this first task. It's very much testing your knowledge. It's going to be filling in blanks, arrows, drop-down boxes, and all that sort of thing. So there will be some writing that I will do as part of this, but in the real thing, you're going to be looking at a drop-down box rather than having to type it yourself. Okay, so as we said before, you've got, I'm just going to change the colour on this because that pink was quite strong. You've got 10 marks available on this task, and we'll say allow about 12 minutes to complete it. You may need a bit less time than that. It just depends what's being asked. You may be asked about different types of businesses, so you're going to be needing to be familiar with business entities and the idea that maybe your business might have a different identity from the owners, or it might all be fixed in together, and it's, you know, it can exist on its own in a way. However, you've got things like sole traders. So these are your kind of one-person operation. We see there that it relates to about one-man bands. So plumbers, electricians, plasterers, a lot of them will be sole traders. And that is kind of all rolled into one. The individual and the business fit together. So they will be personally liable for any business debts. They may have to sell personal assets in the worst case scenario to be able to pay business debts. There's no separation with the sole trading, and they are taxed differently as well. That's what you need to know at this level. You may also be asked about partnerships. Again, this kind of is a similar thing to the sole trader, but you will have more than one person involved in a partnership. So it's a minimum of 2 people. But the idea is that they're coming together to make that profit, which we're all trying to do in most businesses. There is one coming up where they're not going to make a profit. And basically, it's like a group of sole traders. And they may have their own specialism. So it might be that you've got, I don't know, a sort of property management type company, and you may have one partner who's a plumber, one who's an electrician, one who's a plasterer, one who's a roofer, and together they can provide a complete service to their customers through those different specialisms. Another very common partnership, which you may or may not already be aware of, are your GP surgeries. The GPs tend to be partners in that business, and then they provide service to the NHS as their main customer. And we are all customers of that in a roundabout way. So again, like with the sole traders, you've got no distinction between the business and the individual partners. So again, those partners are personally liable for those business debts, and they have to sell personal assets as the sole trader does. Where we start to get that separation comes with our companies. So these are our limited companies or our public limited companies. So they can either be a private kind of, you'll see at the end of the company name, LTD or limited, and that means it's a private limited company. But you might also get public limited companies, which are your PLCs. So your really big, your Tesco's, your even things like Facebook, where they're often their shares are traded publicly on stock markets, and that's kind of the differentiation between your private limited companies where your shares are a bit more closely controlled, and then your public limited companies where you want to, you could rock up and buy some shares in Tesco's if you fancied it. There's a lot more regulation with your companies, your public and private limited companies. You have to be registered with Companies House, and then you'll get a certificate to show that you are an incorporated company, so you're your own standalone business. If you are the owner of the business, then your status is completely separate from that business. So you are not personally liable for the debts. If the business goes under, you will only lose whatever you've put in, so probably some sort of shareholding, which might not be a great amount. And we also keep the people who run the business are our directors, and they may not necessarily be shareholders. They may be asked by the shareholders to do that direction work. So yeah, you've got, as I say, you've got your 2 different ones here. So you've got your limited companies. Oh, apologies for my handwriting. And then you've got your PLCs. So you've got 2 different ones there. But the main one that you will come across are those private limited companies, because there's quite a lot of those. Your final organisation that you need to be aware of are the charities. The difference with these is, as it says, they are not looking to make a profit. So they are just looking to cover their costs to do the charitable work that they do to help people or animals, or it might be that they're raising funds to help people in other countries. I'm sure you're very familiar with what charities do, but yeah, their goal is not to make a profit at the end of the day. Any money that they have in excess of their costs, they would look to push out to that greater good. So yeah, so you may be asked about different types of companies, how they might finance themselves, and we've got a question on that later on, which I will come to. You also need to know about sort of the legal requirements within the business. Now, in this table here, you have got the requirements for our limited companies. So they have to make sure that they are keeping and this can, a lot of this is publicly available, by the way, a list of their directors and their secretaries. So every limited company must have at least one director, and they must have someone who is officially company secretary. And though their role is to make sure that all of the legal paperwork and all the requirements that a limited company has actually happens. And if it doesn't happen, then they could be personally liable for any penalties. They may even be told they can't be a director anymore, or things like that. They also have to keep a register of their members. So that's a register of all the shareholders. It has to show, things like the number of shares they hold. So does one shareholder have maybe a controlling interest? They may have more than 50% of the shares in that business, and therefore they have control over decisions that may be made. And you also have to know, like, if they've bought and sold shares in that business and when that happened. You also need to keep a record of any shareholders that might have significant control. So they might own more than 25% of the shares or voting rights. So it might be that they have another shareholder who votes the same way as they do, and they're sort of in cahoots with each other. And then that will overall give them more than 25% of the control if you put those two companies together, but they're always voting in the same way. The other thing that may need to be required is that you keep any minutes of any general meetings. When we talk about general meetings, what do we mean? Who tends to think on that? What's a general meeting? They're sometimes known as annual general meetings or AGMs as well. Tends to have a think about that. Or just kind of say it a little bit there. Your limited companies have to provide a meeting at least once a year for all the shareholders, and it can be where maybe any significant decisions are made, or the shareholders are updated on the performance of the business, but it has to be done at least once a year, and there may be votes on, as I say, those important issues. Although, to be fair, a lot of important issues won't necessarily wait until those general meetings happen. It may be that they have to call on specifically to vote on those decisions, and the decisions could be, appointing new directors, removing directors from business, and maybe any other significant decisions. So this bit is very, very different from what has been studied previously at level 2, but I think it's a really important bit to include. The other things that you may need to keep, this is a really important one, so keeping accounting and tax records. So we have to keep any accounting data and any tax data for a specific amount of time. Do we know what that specific amount of time is? It says about a statutory minimum time period. Do we know what that is? Bit of an extra question for you. Yeah. Don't worry if you don't, it's fine. It's just sort of something else. So generally for tax purposes, you will be asked to keep records for 6 years plus your current year. So you're kind of going to be looking at 7 years overall. And that just means that should someone like HMRC come and say, we want to do an audit on your VAT or your corporation tax, then you've got all the records to prove that. That's as far back as they will ask you for. So you need to make sure you're keeping all of those things and you're not just whacking data in the shredder when the financial year's passed. And there is also a benefit to keeping that data for kind of financial performance measurements. We can look back at previous years and see how we performed compared to the current year. Another thing that's important to keep for the limited companies is this confirmation statement, and this is just a requirement that the company secretary will usually do. and the companies need to confirm all of the details that once there's a registrar for that company's house holds. So it might be again like who are the directors, who are the shareholders, when are the accounts made up to, all that sort of thing. A lot of this is now done and filed electronically, so they will expect that you submit your annual accounts for company's house once they've been once your year end has passed and you've done all the adjusting that needs to happen. It's more for the next level up, but it does happen. Then once they've been signed off by your accountants or your auditors, they will then be submitted to company's house, and they are publicly available. You can go and have a look at them. They don't tell you a great deal. You're not going to be able to go on there and find out how much Tesco spent on, I don't know, milk for the office. It's a basic one, because a lot of it gets rolled into bigger categories. So, but yeah, it gives you an idea on the performance of business, and you might think, well, I'm about to accept a job from this company. I'll just have a look and see how they're doing financially, and whether it's a good idea for me to accept a job with them, or is it looking like they might not be around this time next year. So yeah, that's often a reason why someone may look at a limited company's publicly available accounts on company's house. But we will also need to file any tax returns and BAT returns electronically now, because it's a lot quicker than filing those paper returns that used to happen in my very early days of working in accountancy, which was a little while ago now. You could still submit everything via paper and putting it in the post, but that's been one of the really big changes in the last sort of 10 plus years, that everything's really moved to that making tax digital kind of way of thinking, that everybody just submits it via the web. Just a couple of things to have a look at before we move on and have a look at some questions. This is a little section, but worth knowing, and there is a question about this that we're going to come to, is about buying a company off the shelf, as it were. So there's actually nothing wrong with buying an existing company, rather than maybe setting up a company from scratch yourself. And this is what we mean when we say we're buying a company off the shelf. That company, once you buy it, it's then available for you to use and continue, and you may be a controlling shareholder of that business. But you need to know about kind of the pros and cons of those, and what needs to happen with those off-the-shelf companies should you buy it. Obviously, you need to make changes to the data that's held with company's house about who owns the business and what it's called, potentially, and all that sort of thing. But we will come to that in the questions shortly. The other thing that may come up in this question is the different functions of the business. So those of you that have done the costing unit on this level already, whether that's in the old syllabus or the new, you will have come across classification by function, and that's when we talk about things like our different departments, so things like sales and operations, logistics, HR, finance, all the kind of that is what we call classification by function, and that creeps in here as well. And it may be that one function will support another function. So in finance, we're very much at the centre of what happens in a business, and we will deal with, we'll probably have a link to our sales, and we'll have a link to operations, we'll have a link to human resources, because in the end, everything kind of feeds back to the money. But that is, as I say, just a brief description on classification by function, and knowing that there's all these different departments within the business, and that was something that did crop up in the old synoptic unit as well. So the previous version, that's not necessarily something that's new. So if we have a look at just quickly how the finance function is broken down. So some of this may be familiar to you already from work, but if you're working in a finance department for a company, as opposed to working in an accounting practice, You may be in one of these two areas. So it might be that you're working in the financial accounting sector. So that's things like where you've got like your, maybe you've got sales ledger, or you've got purchase ledger. That's the day-to-day kind of operations. We're recording invoices. We're making the payments because our kind of cash or treasury section may well be in there as well, but it's dealing with the actual day-to-day stuff. And that's the bulk of what we do for this level 2 qualification, is you're learning about those financial accounting aspects. The other thing you've got is your management accounting. So this is your kind of forecasting section. So they're more internal to the business, and will look at planning ahead, and let's say forecasting what might happen in the business. So budgets, say forecasts, all that sort of thing falls under management accounting. You've then got cost accounting, which isn't necessarily in every business, but that's more about maybe those kind of production heavy businesses where you're looking at how much a product is going to cost to produce and sell. It is kind of a bit of an offshoot from management accounting in a way, that cost accounting bit. And then your final one, and for some businesses this falls under finance, for others it falls under payroll. Falls under HR, and that is payroll. And their job is to make sure the staff get paid on time and they get paid the right amount of money. Their deductions for tax happen. So again, you may be asked to sort of how different departments fit with each other, and maybe what their requirements are if we've got a bigger business decision to do. There is a question on that shortly. It might also be a case that a business will outsource. So one company may get another company in to do their accounts. So for example, really good example, we may say, well, we haven't got enough people to do our finance function, so we're going to outsource that to an accounting practice, and they will do it for us, and we will pay them for that. Or it might be that we outsource certain elements of our production, because it's going to be cheaper for us to do that than just maybe having to set up another production line in the factory, or buy more factory space. Just make it easier for us to ask another company locally, hopefully, to do that for us, because they've got the capacity. And as I said before, we also need to know about how all these kind of financial functions, we talk about accounting and payroll, how what we do helps the organisation to run smoothly and efficiently, but we also comply with any rules and laws that we need, and also that we're managing that. I mean, this is really, really important, that we're managing what we call working capital, and that's our kind of cash position, to make sure we're not going to run out of money, because in the end, that's the most important thing. Right, I've talked enough. I think it's probably time that we had a look at some questions. So there's not a huge amount of questions in this task one, and as I said before, a lot of it is filling in blanks, drawing arrows, linking things up, and maybe making some drop-down box decisions. So task one is very scenario based, so you will be given a scenario like we've got in this section here. So we're being told that we're working for an accountancy firm, and a client that we've got has asked for some advice. They are thinking of buying an off-the-shelf company, and they may look to change the company name. Oh, don't want my eraser, I want the pen. But they're not quite sure about the administration involved and what they can and can't do when buying such a company. So we need to fill in each of these, and we've got a pick list here. So we have to decide whether we're going to be saying that they must or they may do one of these two things. Okay, so we have to look at what they can or should do with regard to the register of members, and also about the company name. So any thoughts on this, first of all, whether it should be must or may for the change of register of members, and whether it should be must or may for the company name? Yeah, not sure. I know it's a bit daunting, this first question that we're getting to for this. The register of members, if we remember from our little notes before, that's the information on the directors and the shareholders. That's the stuff that goes to Companies House. Okay, so if you're going to buy a company that's kind of ready-made, and maybe the current owners just want to sell it, they're wanting to, you know, unburden themselves of it, and you think this is a great deal, I'm going to take it. You then become the business owner, you become the controlling shareholder. And because that is changing, it is a requirement that you change the information on the register of members that's held with Companies House. So that is a must. They must do that change, because if they don't, the information is incorrect. And that's a big problem, because it must be publicly available to know who the shareholders and the directors of the company are, so that everyone can know that. And if it's out of date, then that's a big problem. In terms of the company name, there's a bit more leeway with this one. They can keep the company name as it was before. So if it was ABC Limited, and you think, oh, don't dislike that, it's maybe not got anybody's particular name or linked to a particular person who may not be with the company anymore, then, you know, we'll keep it as it is. It might be that the company name is very well known, very significant. You know, for example, you know, we all know Boots, the chemist, you know, or drugstore, if you want to use a different term. But we all know what Boots is. You can go there, we know what you can get. If the people who own Boots, a little bit different because they're publicly traded, but as an example, if they decide, well, for example, they are currently owned by a company called Walgreens, which run a lot of drugstores in the US, and that's not necessarily as well known a name as Boots is. So although they've been taken over by another company, that company has decided not to change the name because it's so well known within the British public. So they're not going to change that. But they can. It is not a requirement. They don't have to change it, but they are allowed to if they feel that they want to. It might be that they are taking over a company that's got a bad reputation, and they want to have a fresh start and a nice fresh change. And they've changed the name, but the underlying company operations isn't changing that much. So, first section, we've done it. We've got a couple more to have a look at on this task. Following on from that first question, your client has got some ideas on how they're going to expand this off-the-shelf company that they want to do. But they want to know what type of finance they should be securing to help that business succeed. So when we say, you know, what is a source of finance, that is a way of getting money in through somewhere else. It might be, as I say, we've got these ones here, we've got, you know, public donations, we've got a business loan, private savings, and then shares on the stock exchange. So what we have to do for a question like this is know which of these sources of getting additional money each company can, or more importantly, which ones they can't access, because some of them they are limited to particular types of business. We've got 4 types of businesses on the left-hand side. We've got our sole trader, we've got our private limited company, we've got a public limited company, and we've got a charity. So, excuse me, I'll let you have a think about those, and if you've got any ideas as to which one is the most likely source of finance for different types, then pop it on there. Oh, lovely, we've got some ideas coming already. So yeah, for your sole trader, you are really kind of limited to private savings. you're not going to be big enough to have donations from the public. You may get a business loan, but it depends. And you aren't going to necessarily be able to get shares on the stock exchange, because that's very, very, very much limited to one particular type of company. So yeah, any others that we think that we can think, well, it's probably only going to be that one. Lovely. Yeah, so for our private limited company, again, we're not necessarily going to be accepting donations from the public, and we can't get shares from the stock exchange, because that's for a certain type of company. So for us, as a private limited company, we're going to choose the business loan. We also wouldn't use private savings for a private limited company, because the business owners and the company are completely separate. So you don't really want to put in your personal money into it, because if business goes under, you will lose that. And you're not personally liable for those debts. So really keep it separate. So that just leaves us with the public limited company and the charity. So any thoughts on that? Yeah. So I'll do this a little bit the other way around from what's been said in the chat. But as we can imagine, the charity, their main source of income is from the public donations. And I'm sure you've seen advertising on telly for like the RSPCA, or for what are the ones that I see when I'm watching like HGTV, like Sight Savers, Donkey Sanctuaries, NSPCC. They're allowed to advertise to get donations from the public, and there's also charities like Children in Need who have specific one-off events, and they get a lot of donations from the public. So that's their main way of raising money to be able to do what they do, which means that the final one, our public limited company, is where we get those shares sold on the stock exchange. And you will often see companies that will move from this private limited company status into public ownership status. I seem to remember there was quite a big noise made when Facebook, or it's called Meta now, when Facebook went from being a private company in the US onto trading on the US stock exchange, and people who'd been paid in shares by Mark Zuckerberg in Facebook's early days, when it was a real sort of bit of a pipe dream, made a lot of money because those shares just rocketed in value when it went on the stock exchange. That usually happens when things tend to kind of calm down, and you'll see fluctuations in stock values, but often it's quite a good indicator of how the more general economic picture is. But that's as far as we go with economics on this at the moment. So to finish off this task, we've now got a different question. This is around the different business functions. Let me just see if we've got the pick list at the bottom. So we've got a different client now, a different situation that's come to us for some advice. There are service organisations. That's a nice full inclusion of service. So their staff are the biggest asset that they have. They don't produce products. They provide a service, and without those staff, they can't provide the service, or they might be not able to provide the service as well, as they have been doing if certain staff leave. They want to get some people management software. So that might be some sort of kind of human resources based software they can use to book leave, staff can book leave on, or there might be some sort of staff wellbeing section on there. If they book the holidays, have an employee handbook on there. It might be they need to integrate it with other bits of the software to look at staff availability. So you don't want to be booking them down for particular jobs if they're on holiday that day. So lots of different things that can be available with this type of software. You don't need to know a great deal about what might be in people management software, but mainly what the different departments in a business may need that software to do, and that's what this question is asking you about. So it says the department managers have been contacted to understand their requirements from the system. We've got 4 statements here, and I'm going to number each one. Okay, and then you can tell me which one is which. We've got a pick list down here, so we need to allocate one department to each statement to say which department needs those things from the software. So we've got first one, the system needs to store employee bank details and their pay slips. We also wanted to store the employee handbook and other policy documents that staff may want to access. We'd like it to be able to integrate with other pieces of software used in the organisation. And we also wanted to track holiday overtime and general staff availability. So might be levels of sickness, absence as well. So we've got human resources, we've got information technology or IT, we've got the operations section, and we've got the payroll department. So have a look, think about which one of those, which department oversees those different things and is worried about those different things. And let me know what you think. You can put like, you know, I think statement 1 is this department or function. I think that statement 2 is that one. Just kind of think about that for a minute. This is our last question for the evening. So we think that the first one is payroll. Yes, I don't disagree with that. Payroll is going to want to know the bank details so we can pay the staff and also keep a record of those pay slips. So yeah, we've got payroll there and we can scrub that one out. So we pick that one. Any others that we're not sure about? Right, okay. I'm going to disagree with the one for section 2. I'll explain why in a minute. But I'll give you a chance to think about some of the others. Shall we go for it? Okay. Statement 2, the system needs to store the employee handbook and other important policy documents. Although IT was put down in the chat, it's not their remit to worry about staff policy documents. That more falls to the remit of human resources or HR, because it's their role to put those documents together and also make sure that staff have access to them. They may also require that you tick to say you've read them and all that sort of thing. But yeah, that if we're going to have that in the system, that's what HR would want to see in there. However, we think IT doesn't disappear straight away because it's going to be up to them to make sure that we've got this integration with other pieces of software. They will be able to say what can and can't happen with that. So it's our IT department that would factor in for those things. Okay, which means that our final one is going to be our operations department. You know, because I say there's nothing more frustrating than trying to plan staff time when you don't know when they're going to be away. Whereas if you're able to have a system where it says, oh, well, we can't put Joe on that job because he's in Tenerife for 2 weeks, then it's much easier than putting Joe on the job and then realising that, oh, well, he's going to be in Tenerife for 2 weeks, and then you've got to find somebody else to cover that. So, yeah, so it's just, to say, having that familiarity with what each business function does, or each business department does, and why they, you know, what they might need that data for. So that is our first task for business environment done. I hope that you didn't find it too daunting as a start, and yeah, that you enjoyed it. And we'll have a look at task 2 next time.